vote. Hi, everyone. It is 2 o'clock, and I would like to call the Silicon Valley Clean Energy Audit Committee meeting to order at 2:01 p.m. on Tuesday, March the 3rd, 2026. May we have a roll call, please?
Yes. Committee Chair Makachuk.
Present.
Director Tyson.
Here.
Committee Member Kim. Here. And joining us remotely, Committee Member Sangha.
Present.
All committee members are present.
Thank you. We have a quorum, and any votes taken in this meeting will be by roll call since not everyone is present in the same room. At this point in time, I'll open it for public comment on any items that are not on the agenda. If you're a member of the public and you wish to speak, please raise your virtual hand.
No hands raised.
No hands raised. I will close public comment and move on to the consent calendar. We have one item, which is approve the minutes of the October 6, 2025 Audit Committee meeting. I'd like to open it for, would anyone like to pull that item? No? No? With that, I'll open it for public comment. If you're a member of the public and you'd like to speak on this, please raise your virtual hand.
No hands raised.
No hands raised. I'll close public comment on this, and I would be looking for any comments, and if not, then I would be looking for a motion to approve.
Tyson moves approval of the consent calendar.
I'll second.
We have a motion and a second. May we have a roll call vote, please?
Yes. Makachuk.
Aye.
Tyson.
Yes.
Sangha.
Yes.
Yes. Thank you. That carries unanimously.
Thank you. We'll move to the regular calendar, and we've got a CFO report. This is a discussion item, and I believe we've got our CFO.
May I interrupt you just because I didn't see a spot for a little announcement sort of thing. So I have a virtual appointment with an anesthesiologist at approximately 3:25. So I will need to step out and do a remote thing at that time.
Okay. I believe we will endeavor to have you make that meeting.
Excellent.
With that, and thank you, any other comments or announcements before we proceed? No? With that, CFO report, please.
Only thing I want to report is that the last meeting we had a very good discussion on SB 96, which we have implemented for this year. One thing we had discussed was bringing in policy to the Finance Committee and setting a threshold based on which we would do the capitalization. So we have decided not to take that to this Finance Committee, but we will be taking it in May, a planned Finance Committee meeting in May. So it doesn't affect anything in the calendar, just a little delayed. There were a lot of agenda items for the Finance Committee meeting, which will be happening this Thursday at 10 a.m. here. So that's just an update, and it doesn't affect anything because as long as we get the policy implemented for the next fiscal year, the policy will apply.
Okay. Anything else to report?
That's my report.
With that, I will open it for, first of all, does the audit committee have any questions for the CFO on this or comments? No? I'll open it for public comment. If you're a member of the public and appearing remotely or here in person, since we have someone appearing in person, please either raise your hand, your virtual hand, or your hand right now. Yes, Council Member Hines.
Terry Hines,
from Campbell.
Campbell City Council, District 1. I'm the new alternate that will be verified in the next meeting, but it's been introduced that I'm the new alternate to it, and I wanted to come to this audit and IT review as I have that background to be able to offer services, and am interested in being on the committee once verified and approved. Thank you.
Okay, so that's a comment on the CFO report, correct?
There's a public comment to whichever, probably it should, yes, okay.
Thank you.
Wanted to know that.
Yes.
Okay, with that, is there anyone else appearing that would like to make public comment on this item? No, I'll close public comment. We completed the CFO report, and now we'll move to item 3, which is overview of committee function. This is discussion, and I believe that our CFO is going to provide a report on this.
I will go through this very quickly since most of the members have been with us for a while and had a great meeting with Kim yesterday. Sorry, Jesse yesterday. Okay, so welcome. We really appreciate you being in this committee, because this committee doesn't meet that often, but it's very important governance function. So appreciate everyone's time on this committee. You know, the primary role here, just want to give an overview of finance and accounting for especially new members. And the distinction I want to make here is a very key function for us, accounting, we outsource with MAR Accountancy. And as you probably read from the chair's report, MAR Accountancy does accounting for a lot of CCAs and very uniquely positioned to provide us the services. So we have that function, but obviously he does that function with the oversight of SVCE and the finance department here. So that's one. And the purpose of this committee obviously is you working on behalf of the board to review the auditor's results. One of the key functions is the financial audit, which the auditor, Kellen, will go through with you. This is for the audit of fiscal year ending September 30th, 2025. We have to complete our financial audit. Financial statements have to be out before six months after the close of the fiscal year, which would be March 30th. So this is well in time for that. And then after this, after the audit committee reviews it, it will go to the board at the next week's March meeting. The board will receive the results as well as an opportunity to engage with the auditor as you can. I think I've covered most of what's on this slide. If there are no questions on this, again, this is your opportunity to engage with the auditor, and the chair also had the opportunity to meet independently outside of this meeting with the auditor as well. One other item that we do cover in this meeting is IT audit in addition to financial audits. So we'll have IT department coming later to present this. There's two types of audits. One is the security assessment, which we do on our own accord using external parties. And this basically looks at vulnerabilities, and we do a lot of scenarios, sort of like stress testing the system for cyber attacks. And we have an independent measure of score and independent benchmark against industry standards to compare against. The IT team will go into that. In the past, we have had this discussion also as a closed session item, so where we could discuss things we cannot discuss that could, if we were to discuss that, could place the agency in some vulnerabilities and threats. So for that reason, the need was to have a greater discussion. We had it in a closed session. The other audit there is the CPUC mandated audit. This is because we have access to our customers' meter data, and CPUC requires an annual audit and a comprehensive audit every 3 years. We've completed the comprehensive audit last year, so next comprehensive audit is, I think, since April 2028. And this year we'll have another audit, annual audit, and that will be in April 2026. And the IT team will be here later on. It is an agenda item, so you can talk to so many questions you have on any of the IT audits. The timing of these meetings, usually for very good reasons, we generally meet twice a year. At this time, when you receive the results of the audit, and usually around September time when we kick off the audit. And one of the agenda items I have here is changing our fiscal year. And then when I go into that discussion, you can see that how that changes the timing of this. But that's sort of what I have planned for this. If there are any questions.
I have no questions. Mind you, I've been on this committee for several years. So with that, I would ask the other committee members if they have any questions. No? Okay. With that, I will open it for public comment. If you're a member of the public appearing in person or appearing remotely, please raise your hand or your virtual hand.
None online, Chair.
None online, none in person. We will close public comment on this item and move to item 4, which is elect the chair and vice chair of the 2026 SVCE Audit Committee. And I believe we've got a staff report on this. Andrea, go ahead.
All right, thank you so much. Being this is the first meeting of this group, today we'd like to select the chair and the vice chair for 2026. Just a reminder on process, we will ask people to provide a nomination, including self-nominations. Each interested person will be allowed time to express their interest in this role. If more than one person is interested, we will do a roll call by vote name. A vote of 3 is needed for a majority. And at the end, we will do a ratification vote to solidify the selection. That concludes my report.
All right. So first of all, we'll elect the chair and then the vice chair. And if there is anyone that would like to be the chair, please nominate yourself or someone else. And I will say that that I plan on resigning from the audit committee because I'm on the finance committee, but we've got a difference in fiscal year end. So, we have a difference in duties. So right now we're dealing with the audit for the year ended September 30th, 2025. And this audit committee is covering that fiscal period. And coming up in the next fiscal year, which we're in now, I will be on the finance committee. So you can't audit what you're kind of involved with. So, however, the audit committee should be able to report to the board at our next meeting, and if and when we approve the financial statements, they will be the audited financials. They'll be on the agenda for the next board meeting. Is that correct?
Correct.
So therefore, I think it's from a continuity perspective, I would like to do that. I'm sorry if I'm going on. Are there other nominations? George, you missed it. We're nominating the chair and the vice chair, and I've nominated myself. So that I've nominated myself.
Okay.
And I will resign after reporting to the board as the chair.
Oh, okay, all right. I'm up to speed. Sorry, now I have a surgery time. I thought I should take that call.
Are congratulations in order?
Yeah.
Yeah, progress. If I don't have the surgery, I don't know what I'm gonna do.
Okay, good. With that,
Just a question, so that means when you resign, the chair position becomes open again?
That
And
is
at that
correct.
point, we'll take another vote, the group will take another vote.
I'll second the motion to have the current chair continue to be the chair in the new fiscal year until such time they resign.
thank you. May we have a roll call vote, please?
Yes, Committee Member Sangha,
Yes,
Jack,
Aye.
Kim, yes, Tyson,
Yes.
that carries unanimously.
Now, vice chair, is there someone that would like to nominate themselves or nominate someone else to be vice chair?
The term is through next year, and so I'm actually gonna be termed out of my city council position in December of next, and then I will no longer be on this board in January.
Oh, That's news to me.
That's what the calendar is telling me, yeah.
Is there a possibility you could serve another term, or are you termed out? You are termed out.
Two terms.
Okay.
If there's no other takers, I'll happily nominate myself to serve as the vice chair.
Okay. Any other nominations? No. I will second your nomination. And I'll ask for public comment on this, since I didn't before. If you're a member of the public and you wish to speak, please raise your hand or your virtual hand.
No hands raised, Chair.
I'll close public comment and ask for a roll call vote, please.
Mekachek?
Aye.
Kim? Yes. Tyson?
Yes.
Sonda?
Yes.
Motion carries.
Thank you. With that, we'll move to item 5, which is receive the financial audit report from Soren CPAs and recommend the SVCE Board of Directors accept the audit findings. With that, I believe we've got Kellen Gilbert here, the partner with Soren that has been our auditor for a number of years. Over to you.
Thank you. Appreciate it. If you jump to the next slide, a brief introduction. So my name is Kellen Gilbert. I'm the lead audit partner on the engagement. I've been at formerly Passini & Brinker and now Soren for about 16 years, and I think I'm at about 18 years in public accounting. Need to update this slide here. Another year has gone by. With me, or not on this call, but as part of the engagement team is Alejandra Schaefer, who is the engagement supervisor, and Alana Rico, who was the engagement senior and has since been promoted to supervisor. Next slide, please. As I just mentioned, I mentioned Passini & Brinker. That was our legacy firm, who was your auditor. In May of 25, we combined practices with a number of other like-minded and like-sized firms, and we have officially rebranded as one unified firm, Soren. And this was a really important strategic merger for us. There's a lot of changes in the industry, from less and less students graduating in accounting degrees to newer employees not quite wanting to put in the grind that accountants were known for back in the day. I sound pretty old when I talk like that. As well as big technologically challenges such as artificial intelligence and ever-changing regulations. And we just felt like it was strategically a great time for us. We were about a 80-person firm, and looking at what lies ahead for the accounting profession, we felt that we should make a strategic merger, get a little bit more firepower and oomph behind us, not trying to tackle all of these challenges on our own, while still maintaining the local feel, the local control that made us a successful firm in Northern California for about 60 years. So this was a great change for us. We're a little over a year in, and I'm really happy with what this has done for us. Most importantly, what it does for you. A lot of my clients always like to ask, what does this mean for the engagement team? Are you going to bring in folks from outside the area? Are you going to, increase our fees a lot? They usually ask a little bit more politely than that, but and the good answer for this is that no. You can see it's the same engagement team. There's no changes. It's still being handled locally. There's no changes to the fees. There's no changes to the timing of the services. Really, this was a merger for us to have more resources at our disposal, but not meant to change the way that we interact with our clients or the way that we do business, which is why it was such a strong opportunity for us. Next slide, please. So as was reported, the audit is complete. We issued an unmodified opinion, which is the highest level or cleanest opinion that we can issue. And that means that in our opinion, the financial statements were free of material misstatement. We also did not note any significant deficiencies or material weaknesses during our audit. Next slide, please. I mention this every year. I always leave this slide in the presentation. I just think this is a really important slide for any presentation for the public, just because there is a lot of misunderstanding about who is responsible for the financial statements and the underlying financial information. So management is responsible for preparing the financial statements, deciding which disclosures to include, maintaining a system of internal control over the accuracy of the financial information within the disclosures, the way that the financial statements look. All of these things are the responsibility of management. We, as the auditor, we're responsible for assessing the entire package of the financial statements and giving our opinion on whether or not we believe that they are materially accurate or not materially misstated. We do that through a risk-based audit approach, meaning that we spend our time in the areas that are of higher risk that we determine during our planning phase. We consider internal controls. We perform tests of year-end balances and other auditing techniques like analytical procedures, walkthroughs, and other substantive tests. And we read and evaluate the adequacy of the footnote disclosures, all with the aim of providing our opinion at the beginning of the financial statements. But again, overall, the financial statements are the responsibility of management. Next slide, please. So as I mentioned, the risk-based audit approach, again, there's some misconception here. This does not mean that you are unnecessarily risky or that there's anything unusual about your organization. It just means that this is the professional standard approach that auditors are required to take. Instead of doing what some would call a cookie cutter approach, where you beat up on the statement of net position, they really want you to make sure that you're putting an emphasis on the planning phase so that you can design your audit procedures based on those relative risks. And that's why it's called a risk-based approach. So making sure you're understanding the operations, the operating characteristics, your processes, internal controls, making sure that what is written for an internal control or a process is actually what's taking place. Those are all phases of the planning, parts of the planning phase that we use to complete our risk-based planning approach. Next slide, please. And this is just a brief overview of some of the significant areas of the audit. This is not meant to be a complete list. We start with revenue recognition, accounts receivable, accrued revenue. These are always a very important part of any audit. We do a number of techniques here. We test a sample of customer billings, trace those through to related payments. We look at total cash received during the year and compare it to total revenue, again, for a high-level analytic, just to make sure that we're in the ballpark there. We, again, taking a test of revenue, we want to look to make sure that revenue is recognized consistently throughout the year and not just testing right at the end of the year. So we really want to make sure that we're testing a wider range of revenue transactions, excuse me. Cash and investments, a very important part of any audit as well, but relatively easy to audit. We use confirmations to third parties as our audit evidence for those. Looking at investments and underlying disclosures related to those investments, also an important part of the audit. Accrued cost of electricity, a big part of the audit, as well as other accrued expenses. What we're looking for is completeness, making sure that all the costs that should be recorded in the 9/30 year end, all of those costs are appropriately included in the year. And so we're also looking at cutoff as well. Again, making sure that everything that should be pulled back into the prior year is correctly done so. And last but not least, the financial statements and the footnote disclosures, making sure that they're complete and without bias, that they're not including any unnecessary information that could potentially mislead the reader of the financial statements. Next slide, please. So this is a list of required communications under professional standards to those charged with governance, which is this committee. As noted in note 11, SVCE adopted GASB 102 and 104, which did not have a material impact on the financial statements. We did not propose any audit adjustments for the financial statements. We did not identify any unusual transactions where there was a lack of authoritative guidance. So we didn't see anything where we weren't sure how to account for those transactions. We didn't have a disagreement with management regarding the scope and the timing of the audit. This is really important just to make sure that we received all the information that we requested. There wasn't any part of the financial statements that we were not granted access to the underlying support for. And so that's really important to report back. And we also issued a letter dated February 23rd that went through all of these same communications. Next slide. So that's the last question or last slide. I'm happy to answer any questions on either the presentation, the audit, or the financial statements, if anybody has any questions.
All right, thank you. So what we're going to do is we'll take questions from the audit committee, then I'll open it for public comment, and then I'll bring it back for a discussion and a vote. I believe we're going to have a vote on this, a roll call vote. So with that, questions for our auditor from the audit committee members. George, you look like you've got a question.
I do. I have one. Maybe it's more for Amrit, but then I have a second one, and I don't know who that's for. But could be him. So the one thing that really, first off, I appreciated the documentation. It was easy to. I'm always looking at this. Is maybe my 20th audit committee I've been on over the years. So I look for certain things, and I'm glad I don't see them. So that was really reassuring, and it was all very clear, nicely prepared. The whole rate stabilization fund creation was one that just, I kept looking at it and I felt like there's a backstory here. Now I know that it's to create a fund that allows us to moderate rates in the future because the things shift quite a bit. I saw it was $100 million and I saw there was a policy about how big it could be. And I wonder if you could just add a little color to how did you choose that number?
Yeah, good question. So last year we went to the board, we implemented GASB 62, which allows us to create a rate stabilization fund. As you know, when we conduct our business, we do stress testing, so we have sufficient operating reserves. And why did we need to create this fund? The reason we did this is if you look at our financials, right, the board has allocated a lot of funds for customer decarbonization programs. We have as of this fiscal year, as of the ending of the fiscal year that we're talking about, we had close to $100 million in what we would call earmarked funds. But there was no way in the balance sheet that you could see any of that. So we implemented GASB 62 with the authority that the board gave the staff to basically recognize that $100 million. Now, the policy to the board gives us a lot more flexibility to the staff, but we cannot exceed the earmark funds. And then there are some other conditions to that. So that's primarily what, and we also discussed this in the finance committee, that we would be recommending this $100 million. And that's what we targeted, and that's how we reached that decision.
So it was approximately the amount of the earmarked funds for
Yeah,
programs.
totally, our programs was a big component of that, close to 95 to 98, if I recall correctly. And of course, there's some remaining funds for the building funds. So total earmark was slightly more than 100 million. We also put 100 million. And also, you can only do this in a year when you have this capacity. If you look at our financials and the projections we're making, this is right now one of the only years we could have made this. Not do it retroactively, and looking at our projections, financial projections are showing that we will be actually withdrawing from reserves in the future.
Yes, okay. Thank you. I think that answers my question. I'm going to move on to my second question, and this is directed at the auditor, and the broad subject is materiality. And you talked several times during the audit about that. I'm just looking for a greater feel for what that means, because I can appreciate for things that could be fraud, you'd have a very small materiality because bad fraud is a bad thing, but some other numbers differently. And so I have been contacted by a resident in my community multiple times over the last year or so in connection with the fact that we issued a $50 rebate to our residents a few months ago. And he produces so much electricity that he had no way to get that rebate. And so this particular individual made a request and was issued, I believe, a check for that amount. And so, but he has continued to ask, why are we not seeking out to find any other people that are in that position? And so I'm just trying to to me, a $50 thing. I just spoke with our building planning director. I said, what do we look for in our small town for errors on, say, building permit costs? And he said, $1,000. And so I'm looking and I'm saying, $50 doesn't sound to me like something that we would need to focus on in this meeting. And I'm just looking for some confirmation. I don't know how many people it is. I don't know if it's 100. I don't know if it's 200, but that would tell me I'm not seeing a materiality, but I'm bringing it up to question. To whoever is best equipped to answer this.
I'm happy to take the first stab at that. I think it's a fascinating question, and the whole concept of materiality is really material to whom and in what context. For the financial statement audit explicitly, we typically base our materiality off of some factor of either total assets, which was 690 million this year, or either total or gross revenues. So either the 455 million of electricity sales or the 370 of total operating revenues. Professional standards actually recommends that we do not give away our exact materiality calculations, just because they don't want clients to be able to figure out kind of what threshold we might be using and potentially do some shenanigans related to that. So I won't say our exact formula, but those are typically the numbers that we look at, and then it's usually some percentage, 3% or 5% off of those figures, and then we'll use a fraction of that materiality during our testing, because we always want to make sure that we leave a cushion, that we're not finding errors that are getting us close to that material level. But that's how we use materiality within the audit. Now, that being said, I serve on a finance committee myself, and my personal level of materiality related to the financials that we prepare or present is much lower than that. I know that I tend to want to hold myself to a higher level than maybe the professional standards of a financial statement audit. So, $50 without knowing the size of the agency, that's probably not going to be material in my opinion. But what I use as a financial statement audit materiality is probably higher than what a board member or a finance committee member or an audit committee member might consider to be material. So that was a very long-winded, kind of vague answer, but that's how we view it.
It was helpful, and I got what I was looking for, and it was instructive for me to think about materiality from whose perspective, because my perspective here would be to say, these are people that have invested many tens of thousands of dollars for solar equipment so that they are always in a surplus, and the effort to go seek out and reimburse these people would be much more than $50 for us to find a way to get. I'm going into solution space, which I didn't mean to do because everybody hasn't spoken yet.
Do you want me to? Yes, so I don't think that's necessarily an audit question, right? I think it's a question of what is good customer support and good customer service. And to that point, for the customer who's been asking for that, we understand that there are other customers that were in the same situation, not a whole lot. I think his situation is a little unique. And so our solar year, I understand, ends in May, and staff intends to look at all of the customers who were in that position where they generated surplus energy and see who would be eligible for this $50 credit.
Okay, I didn't know that.
And so we plan to issue those bill checks, an actual check after the solar cycle is done. And it's not a lot. It's not many customers. We know that.
10, 100, 1,000, 10,000?
Don't know that answer.
Justin, I spoke to Justin briefly about this, but his assessment was that it's not a widespread. It's not that many customers in this situation, but they applied it as a bill credit, so you won't know. Some customers may have dipped into some of that credit, right? Depending on, so we won't know until the year ends.
Yes, I see. Because winter, yeah.
So that's the reason for waiting till that time.
Okay, all right. I did see it getting into the audit a little bit. So I don't think I'm completely out of line, but I think you've answered my question to my satisfaction. And that concludes my questions.
All right, do we have other questions from the audit committee?
Just one general question for the auditor.
Go ahead, please.
Thank you. Are there any areas for improvement? I would say even not in findings, not like I would say immaterial findings or suggestions for next year.
Sure. We had this conversation, me and the audit chair. I think there's some improvements that could be made in the management discussion analysis, or at least that was his assessment as well, and I agreed with it. That's been an area that I think we've mentioned in past audit committees, just that there's a tendency to want to maybe include some unnecessary information in the known factors and decision section, where you're kind of telling a narrative about future events, and so there might be a little bit less you might want to disclose there, especially with GASB 103 for next year. It tightens up the requirements of the MD&A, and then also providing a little bit more of a detailed explanation explicitly on why there were fluctuations from year to year. There's some pretty broad explanations for why some of it changed. And I think, again, with GASB 103 around the corner for next year, we could probably include a little bit more detail about what drove those changes. So again, that's the management discussion and analysis. So it's really not part of the main financial statement audit. So this is just kind of my you asked for more of an informal recommendation. That would be it. But other than that's really where I would focus on improving. And I think that will happen with the implementation with 103 next year.
Thank you.
Other questions? No? I have a couple of questions. My first question is, do you test the investments purchased and held to SVCE's investment policy? That's
Uh,
you count.
yeah, I would have to double check that. My guess is probably not. I think for the financial statements, we're probably mostly looking to make sure that those are being disclosed appropriately and valued appropriately. You know, if there was a policy description, a policy violation, I don't know that that would raise to the level of a financial statement finding. I could double check that and get back to you, but off the top of my head, I don't recall that being one of our main procedures.
Right, I thought the answer was going to be no. You would look at it at period end and make sure that if OMRA had them on the balance sheet, that they actually existed. So, thank you. My other question relates to your independence, and I'll make a comment, and then I'll ask a question. My comment and observation is when I look at the CCAs that Soren audits, I see quite a few of them. And my comment on that is if it was the Sankey and Brinker, I would be concerned that so much of your practice is concentrated with CCAs. And I like to see a little more, not everything concentrated in a portfolio of clients. So the fact that you've grown and you've expanded, and you're now part of Soren, reduces my concern regarding independence significantly, because you're part of a much larger firm. Now, so that's kind of a comment observation, and now my question. Of Soren's CCA clients, how many of those are you the audit partner on?
We used to have 2 audit partners. Well, that's a great question. I'm not sure if there are other audit partners in the firm who are currently doing CCAs. Within California, I am the only Soren audit partner working on the CCAs or leading the CCAs. I do have multiple other partners who are providing the quality control review. But at this moment, I'm doing all of the California CCAs. But that will change going forward as we have the mandatory 6-year auditor partner rotation.
My follow-on question is, I believe, but my memory isn't that great, this is your 3rd year on Silicon Valley Clean Energy, is that correct? Or is it your 2nd?
I'd have to double check that. I think it's 3 because I feel like we've met a few times. I'm going to say it's 3. Okay. I do track that, but I don't know off the top of my head.
Good. Thank you. Sorry, do you have a?
I believe this is 4th. Next, one more. Our policy requires 5-year changing. So
27 would be when we do the audit.
Yeah, so he can do another audit for the current fiscal year, which will end September 30th, 2026. But for the new, when we talk about the fiscal year change, the stub period and the calendar year 2027, we will need it. We will have another audit, another auditor.
Okay. Thank you for answering that question. I appreciate that.
Point of discussion. I would think that's a good thing that your auditor has seen all the other CCAs. It should mean that they have a real insight into what looks normal for our kind of business.
That's a yes and no. My son is with PricewaterhouseCoopers, and he always reminds me of his professional skepticism. And I believe, Kellen, you know what that means. So sometimes one can become complacent. And, I think it's okay. It's not a cause for concern, but I had to ask the question. Okay. Other questions? No? If that's the case, I will now, I'm gonna open it for public comment, and then I'm gonna bring it back to the audit committee because I've got some questions to ask as well that are at the audit committee level. So I'd like to open it for public comment. If you're a member of the public appearing in person, please raise your hand and ask your question. And if you're appearing remotely, please raise your virtual hand. Councilmember Hines, or alternate Hines.
Not yet. Not yet.
Yes.
The question that I have on one of the reports that I saw, the financials, and I don't know if this is an audit question or a financial question, but it showed the projection of the balance sheet for the number of years, 5 years or so, something like that. And sorry, but at the footnote at the bottom, it mentioned that the difference between the clean energy costs and actual PG&E costs was, the difference was 4 or 5% in the first year or two. Then it went to 1% for the next several years. And so my question back to my constituents is, if I was looking at my PG&E bill, I'm paying $100 for Silicon Valley Clean Energy, about $300 for the electricity that I use. If it's 1%, does that mean I'm paying for getting $3 savings and paying $100 for that $3 savings? So it's a matter of understanding the footnote, and it's maybe more of a comment to get a clarification that I can utilize, and that I think it would be appropriate to project that out to the constituents. Sorry for reading footnotes, but that's where I get to.
I don't think we have a projection in the financial statements. You may be wondering if you're talking about mid-year budget.
I think I know how to answer his question. If you have a $300 bill, 200 of that is transmission and distribution, which PG&E is charging you no matter what. The $100 from Silicon Valley Clean Energy is 1% cheaper than $101 that PG&E would charge you.
Mm-hmm.
That's the difference.
Okay.
All right.
Yes.
All right. Thank you.
And online share, we do have one public comment from Terry McCarthy. Terry, whenever you're ready.
Yes, can you hear me?
Yes.
Okay. I had a couple of questions regarding internal control in the company. Number one, how is it documented? And when was that first documentation put together? The second one would be when you review internal control, I suppose you're also reviewing the controls at Mark Accountancy Corporation. And do you do that for one time for all of your clients, or you do that for us individually?
If I could clarify your question, the first question, is that for the CFO? And I believe the second question is for the auditor, or do I have that wrong?
No, that's fine.
So we have a number of policies that lay out the way in which we conduct business. And we have standards further delineating roles and responsibilities. And then on top of that, we have operational procedures in place. For example, the controls include 2 people at least overseeing invoices, and separation between the person who authorizes payment versus the person submitting the invoice. We also have reviews from each department directors, and all my department expenses I will review, as well as any energy payments, which are all the big dollar payments that I will have to personally approve. So there are layers of, to answer, you can give, those were the examples, there are layers of controls that we have built in, and we continuously evaluate these and assess the efficacy of it and it's a continuous improvement process.
Does that answer your question, Terry?
So when they were originally put together, was it an outside firm that came in and reviewed them, or was it done internally?
No, it was all done internally for our policies. Policies were reviewed and approved by the board, but standards and procedures are internal documents. We've had consultants help us develop them, but not an independent.
Okay, that's why I was curious. Okay.
And now your second question is for Kellen.
Yeah, so we obtain all the internal control documentation. It's in a number of different forms, memos, accounting policies, large PDFs, documents like that. We perform a number of different reviews of those internal controls as part of our planning phase that I mentioned during the presentation. So that includes all of your normal auditing techniques over internal controls. So inquiries and observations is a big part. What we call walkthroughs, which is a procedure that we do to make sure that what's actually written is what's actually being performed. So that's where we want to observe the person actually performing the process or the internal control. Those are the biggest forms: inspecting documentation, making sure that we're seeing adequate levels of signatures or reviews. Those are the basic staples of internal controls. We do that with members of SVCE's accounting team, and then yes, we also do perform inquiries and walkthroughs with Maher Accountancy. As previously pointed out, we do a number of engagements with Maher. So we'll typically meet with him usually a couple times to perform these procedures. Or if there's unique aspects for one audit versus another, we would, again, meet to review those. But typically, we might see multiple levels of internal controls in one meeting or one multi-hour session with Maher. So I think I answered the question, but please let me know if you have if that was unclear.
Okay, so how many of the clients that you have are with Maher?
I believe Maher does all of the CCAs. So of my clients, or just the CCA clients?
Of your clients, yeah.
Of my clients, it's a very minimal number. I think it's like six or seven clients with Maher. But that's 100% of my CCA clients are with Maher.
Great, thank you very much.
All right. Any other questions or comments from the public?
No additional hands raised, Chair.
All right, I'll close public comment. I'll bring it back to the audit committee. And I have a question for the former chair of Silicon Valley Clean Energy, who's also on the audit committee, Mr. George Tyson. And I'm going to ask you a few questions. My first question is, did you review the audited financial statements and the notes there too?
I did.
You did. Is there anything that you were aware of that was in a closed session at Silicon Valley Clean Energy at the board level, or in any of the operating information that that you became aware of throughout the year that would lead you, that would indicate that there could be a contingent liability or a liability that was not disclosed in the financial statements or the notes there too?
I'm not aware of any such thing.
Thank you. I appreciate that. Final question. Is there anything that you're aware of that's in the MD&A, any of the comments that is inaccurate or inappropriate?
No.
Thank you very much. I I had to ask those questions.
I knew you did.
That's good. With that, I'll make some comments. I believe that Silicon Valley Clean Energy is our financial reporting is exceptional amongst the other CCAs in California. I'm very proud of that. I think that we have to be the gold standard. And when you talk about materiality, when you're asking your questions, my view as a licensed CPA to this day outside of California in Canada is that you really have to look at who the users of your financial statements are. And then you have to say, okay, if this is a user of the financial statements, what's going to make a difference in their decision-making in those financial statements? And that's where materiality comes in. If the number was X and instead it's Y, would that make a difference to them, yes or no? If it does make a difference, then by definition it's material. If it doesn't, then it's not material. When I look at SVE's financial statements, I believe that one of the most important users are the credit rating agencies, and when they compare SVCE's financial capability and what our reserves are and that sort of thing, that if there were a downturn, how solid are SVCE's financial resources. So I think that's very important. So I think the work that was done on GASB 62 was exemplary and well done. And I believe that these financial statements are will help the credit rating agencies. And to the extent that we have SVC has a better credit rating, then we can issue debt at our prepaid bonds at a lower rate or through CCCFA, and therefore there's a benefit to SVCE financially, and that allows us more funds to fulfill our mission. And I think our mission, the decarbonization, is number one. So that's a long way of saying I have had some conversations separately with both management and with the auditors. I'm satisfied that the audited financial statements are robust. And with those comments, I would be looking for a motion to approve the audit, or to recommend approval of the audited financial statements for the year ended September 30th, 2025.
I will make that motion.
We've got a motion. Do we have a second?
Second.
We have a motion, a second. May we have a roll call vote, please?
Committee Member Kim? Yes. Chair Makachuk?
Aye.
Director Tyson?
Yes.
Vice Chair Sangha?
Yes.
Carried unanimously.
Thank you. Kellen, as the representative of Soren, thank you very much. We appreciate that. And thank you for spending time answering all our questions. Thank you.
Thank you.
With that, our next item is item number 6, which is to recommend approval to change SVE's fiscal year end from October to September. From fiscal year from October to September. Oh, October 1st to September 30th, to a calendar year from January 1st to December 31st. Sorry, I had to read that a couple times. And I believe we've got a report on that. And this is an action, and it is 2:59. And before we proceed, what time is your appointment?
3:25.
3:25.
Okay, so this won't take much time. And I just wanted to let the committee know, we took this to the executive committee where they voted unanimously to support this change. We're also taking it to the finance committee at the upcoming meeting on Thursday. So what we're proposing, as the chair said, is to change our fiscal year. I'll go through the reasonings for why, with our budgeting and planning, and I'll go through some what it means in terms of our timelines for committee meetings and our planning and budgeting processes.
If I could make a request, if you could focus on not going through the background, because I think several of us have seen this in preparation, but how it will affect this committee, the audit committee. I think that's the key point that I personally would be most interested.
Yeah. So what we're recommending is basically the committee, as you know, meets twice a year, and that will continue to happen going forward. But what will going to a calendar year would mean, instead of meeting in February, we're going to meet most likely in May, and we'll do a kickoff meeting. Instead of doing it in September, we'll do it in December of each year. But before we can get to the new calendar year starting January 1st, 2027, we are going to need an interim period because, as you know, our current fiscal year ends 9/30/2026. So we need a stub period from October 26 to December 26. So what we're asking the board is to set a 3-month interim period, which we will set a budget in September, and then we'll come back to the board and set the budget in December for a new fiscal year for all of 2027. And what we're asking is the board support the committee to basically recommend that the board basically accept this proposal and change our fiscal year calendar year along with the proposed transition period and transition steps. That's the main ask, and that's the main presentation. And if you've looked at the presentations, we have timelines and calendars in there that detail all the changes that will happen. It also goes through the process internally we go through in budgeting. It basically shifts things. It saves staff sometimes, saves the board and the committee sometimes. We will still have finance committee, we will still have a target committee. So all in all, it's more efficient and effective. And the main reason for change, which was in the previous slide, is basically we change rates in January when PG&E changes rates. And it's very important for us to time to remain competitive with PG&E, that we get our rates along as quickly as possible when PG&E changes rates. And for that reason, and we don't have information on PG&E's rate changes as much as we do. We don't have all the information, but we have greater information because of the certain regulatory decisions and data that comes out around mid-October to mid-November, and that's the time when we'll prepare the budget. And it's important because, as we discussed earlier in answer to a public comment, how we set our rates affects our revenues, and so we have big uncertainty on revenue. So for that reason, we have been doing interim. We have been redoing a budget that we did in September again in December. This avoids that necessary steps. So that's the gist of this. Then I can take any questions.
All right. I'll ask the audit committee members if they have any questions for our CFO. No?
Just a quick question. So will the comparison, year-over-year comparison, remain clear in the financial statement for the next year? This is MD&A, there's comparison.
Yeah, you'll still have the 12-month period. It'll be a different 12-month period, but we will have the stub period, October to. So for a while, the periods will be different, but we still will have a 12-month coverage. But what I meant to say is we're asking the board and the committee to recommend that the board basically allow that the stub period audit and the full calendar year, the first full calendar we done together at the stub period and the first, and that's very customary for these type of changes, you know. And we have changed a fiscal period once before, and the same path was taken before as well. And we ran this by our current auditor. We will not be the auditor when we will be doing this review because of the term expiring.
Other questions before we take public comment on this?
Hey, just one quick question, I guess. I did read the memo that the chair had put together, which included all the CCAs, and I noticed that majority of them have a June 30 fiscal year. I guess just curious to know, I understand what SVCE's motivation is, but just wondering if why wouldn't the other CCAs want to follow along with a calendar year fiscal year?
I think.
You want me to try? Yeah, I think a lot of the CCAs followed their cities or counties that established them, their fiscal year. For whatever reason, we decided, we and 3CE are the only two who decided to follow the federal fiscal year. And I think it was just some timing of our launch that it just kind of lined up. But having talked to a couple other CEOs who have the fiscal year, the traditional one that many cities use, they too would like to move to a calendar fiscal year. It's just a matter of priority and work. And I think we're just in a place right now where it's easy enough for us to do it. And because a lot of what we do is really aligns much better with the calendar year than it does the city's fiscal year.
Makes sense. Thank you.
I'll make a comment on that. I always look for a business reason and user the financial statements to what's the fiscal year, what should the fiscal year be, and there are so many operational and accounting reasons to move it to 12/31. I actually would advocate to January 31 because then we're off of peak load with Mar Accountancy because they have quarterly, they do quarterly statements for most of their clients, and I laid out chapter and verse all the CCAs in California and who their auditors are and who does their accounting. And that being said, moving to a 12/31 year end, I think has significant benefits. And I would be surprised if other CCAs don't make that change in the near future. So, sorry, I wanted to add a little color to that. Other questions? No? So I'll open it for public comment on this. If you're a member of the public appearing here in person, or if you're appearing remotely, please raise your virtual hand.
Online, we do have Terry McCarthy. Terry, whenever you're ready.
Hi, thanks. You probably have looked at this already, but are there any lender requirements or other regulatory requirements to have financial statements issued within a certain period of time after year end? I'm really looking at that short period and the fact that the audit really for that period won't take place for quite a while.
Yeah, we have gone through we have some work with a couple of power purchase agreements we're working through. One other issue we do need to work through with the councils on prepaid transactions that we have done, how to handle this. They have annual disclosure requirements and we're still sorting that out, but we think we can reach a conclusion. So we still, there's still some work we're doing to make this happen, but we don't think that there'll be any problem in overcoming those. But if there are any material problems that do come up, obviously we can go back to the board and change this recommendation. But we think we can work through those, and that's what we're doing.
Thank you.
Okay, and I'll jump in and add a little bit more color that one of the notes to the financial statements refers to our prepaid transactions, and those flow through CCCFA, and CCCFA has a 12/31 year end. So having synchronous, the same year end, fiscal year end as them, I think is beneficial as well. So, and you know, all these prepaids, there's a lot of paperwork there. There's a lot of compliance requirements, and it will be some work, but I think once you get through to the other side, changing the year end, fiscal year end will have significant benefits.
Absolutely.
With no other comments, then I'll bring it back. We're looking for a motion on this to recommend approval to change SVCE's fiscal year period from October 1st to September 30th to a calendar year, which is January 1st through December 31st. Oh, there we have the recommendation on the slide deck. Also having a 3-month stub period and authorizing a combined 2-year audit for the 3-month stub period, along with the first-year audit of the new fiscal year.
Tyson moves that we recommend the board of directors approve the 3 items listed in slide 7.
Do we have a motion? Do we have a second?
I'll second.
We have a motion and a second. May we have a roll call vote, please?
Yes, Vice Chair Sangha.
Yes.
Member Kim.
Yes.
Chair Makachuk.
Aye.
Director Tyson.
Yes.
Thank you. That carries unanimously.
Thank you. With that, we're on item 7 of our agenda, and it is 3:11. And you may or may not know this, but we're hoping to end the meeting in approximately 14 minutes.
President, you know what, that's actually pretty good. Do we have a nice, fast presentation for you?
Excellent. So this is the Information Technology and Cybersecurity Assessment Update, number 7.
Hi, Brett Sirianni, the Information Security Manager here at SVCE. I'm going to be taking you through a quick cybersecurity update. Spoiler alert, nothing bad has happened, so things are good.
Not yet.
Don't jinx us. Next slide, please.
Continue the thing.
Oh, so you did. Thank you. So yeah, just going to go over a quick cybersecurity posture here at SVCE, update on security incidents, which again, there are none, and then update on some department changes that we've recently gone through. With that said, some of you have already seen this before. You're going to hear it again, and we're going to go over this every time just to make sure everybody understands what cybersecurity is. Cybersecurity is about protecting systems, networks, digital infrastructure here at the organization. However, the thing to keep in mind is a good cybersecurity program does not necessarily mean that we are completely immune to any incident from occurring. What it really comes down to is it's not a matter of if we can stop them all, it's a matter of are we prepared to deal with them when they occur. And that's what our cybersecurity posture and readiness is all about, making sure that we are prepared to deal with what may come up. To that end, we go through various assessments and audits. We have those mandated by the CPUC. There's the AMI data privacy report that we submit on an annual basis. This goes over the various third parties that we share our AMI data with. We have a I can never say this word. Every 3 years, we have an audit on our AMI infrastructure, and again, the data we're sharing, with whom we're sharing it, and how we are actually managing it and protecting it. Internally, we do tabletop exercises, we do assessments, audits, various tests that all involve testing the various processes and plans we have in place to deal with what may or ideally never comes up, but if it does. One of the big initiatives, though, as far as dealing with security at the organization is training, because it's not just about the technology team. We are not the ones solely responsible for the security here. It is everyone's responsibility. If everyone doesn't take it seriously, it doesn't matter what we do on our end. So to that end, we Before anybody even gets a computer or account, we sit down with them. We go over what they can and can't do, we touch on the major points, the major incidents, the major issues that may or may not be going on, so they're aware of them, and how to safely interact with their accounts and the systems available to them through the company. Ongoing training, a lot of companies do this once a year. They'll have a 1-hour training people have to go through. We do ours monthly. Now, that does not mean we spend an hour with everybody every month. We break this up into smaller modules. This way, security remains fresh in people's minds, so they don't think it's the kind of thing they'll have to think about once a year. It's always there and fresh in front of their mind. Executive training, they were lucky enough to go through a dedicated training just yesterday. I'm sure they had a great deal of fun.
I wasn't there. Sorry.
It was.
I have makeup work to do.
Various admin training. Anyone with privileged or administrator access gets separate training as well to make sure they understand not just the responsibility, but what could actually occur if they do something wrong. This way, they don't just go all willy-nilly and do whatever sounds good at the time. And then ad hoc training as various issues may come up over time, deal with, that type of thing. Point being though, training is at the forefront of our cybersecurity posture. This is how we deal with 90% of what comes up. If people aren't aware, they're not ready for it. So we want to make sure they're ready. As far as the security assessment goes, we try to break this down into a single 3-digit number to communicate how we're doing. Currently, that's sitting at a 775. Well, what is that number? What does it mean? Well, think of it like a credit score. It's actually rated on a scale of 300 to 850. 850 is fantastic. I'll tell you right now, we're never going to hit that. It's virtually impossible. With that said, a good range is anything above 720. Anything above 780 is considered excellent. As you can see, we're hovering right around the 775, which is awesome. We've got a few more points to go. With that said, just this past year, they recently introduced 20 or so new controls that they're grading us on. So all things considered, we're doing pretty good. As far as what makes up this score, you may have heard of the NIST framework or the ISO framework. These are just different security frameworks that organizations may use. This score incorporates these two along with some other proprietary metrics created by the third-party vendor that they find gives a bit more real insight into what's going on. But all boils down to a nice simple score as a means of communicating where we stand. And at the moment, we're at a 775, and I'm pretty darn happy with that. You should be too. Moving on from there, you'll notice there's a big fat 0 on the screen. You do not ever want to see this number higher than 0. This is where we will be communicating any major security incidents. Now, just for context, we break our security incidents down into 3 separate tiers. There's critical, moderate, limited. Critical is something you will have heard about long before this committee meets. That's the kind of thing that's preventing this company from effectively operating. We do not want this. This is ransomware on every computer. This is us being completely locked out. Nobody can sign into any accounts. This is bad. Moderate has an impact on the business, but we can still function. Think that, okay, there's certain services may not be available for extended periods of time, but we can still meet the primary goals. And then there's limited. This is, Andrea here got access to something she wasn't necessarily supposed to get access to. This would be limited, but it does not impair our ability to function as an organization. Now, we consider major incidents the first 2, critical and moderate. And again, you will have heard about these long before this committee meets every 6 months. Generally speaking, I will spare you the time of going into the tier 3 ones, mainly because it's one of those things where it needs to be understood. These things happen. They're not good. It should never be taken lightly that it does, but unfortunately they do. The only time we would be reporting out on these is if we notice a trend or something's going on that's requiring real fundamental change in terms of process. That's when we would dive into that level. Moving on beyond there, we have general updates for the IT department. With Nick Sonato being moved into the position of Director of Operations last year, his role was backfilled by Blake Van de Velde, the new Manager of Information Technology. He's been great since he joined us this past December. Been nice having the extra set of hands, and he definitely knows what he's doing. Unfortunately, he's not here today. He's out on vacation at the moment, lucky guy. And I have moved into the position of Information Security Manager, which is allowing us to put more time and attention and focus on the realm of security. And that is our general update. Oh, I'm sorry. And what to expect next meeting. Give you another update on security posture. Again, you want to see a big fat 0, and you should expect to see the score in the same general range. A minor variance is going to happen. It occurs, various vulnerabilities come and go, but unless you're seeing a 50-point swing, nothing to worry about. And then
There might be some changes because of the new building, so we will be able to address some of the stuff that we've temporarily accepted the risk of, because we don't own the building here. So we, like the janitorial crew, we don't do background checks, because we don't manage them. But we will at our new building. So we'll get some of those points that we've accepted the risk temporarily. So you might see not a big jump, just a jump.
Before this, when's this committee next meeting?
September, October, right? October.
September.
So you might see some change. I'm not gonna promise, but there might be some change. I'm just trying to, something to look forward to.
And then any updates on the cybersecurity incidents, which should be ideally 0. With that said, questions, comments, concerns, funny anecdotes.
Well, I've been through security training for a number of organizations, and the most effective and most embarrassing was one where they sent you fake stuff and they try to trap you.
Yep.
Too bad. I don't see that we do. Do we do that?
Oh, yeah.
Do we trap people?
It happens.
We get a few a month.
You don't want everybody passing. That's bad.
Yeah.
If it does, that means it's too easy.
Yeah.
But if you've got to the point where half the staff is failing, clearly you haven't done your job training. So we usually see about a 3 to 5% failure rate, which is right around where you want to see.
All right, and then my biggest fear is that Monica's going to give a speech and AI is going to listen to it and recreate her voice and come up with custom requests for employees that won't recognize that it's not her. So solve that. Okay.
So I'll get right on it.
I will say, is that what that is? Like,
What's that?
is that called deep fake?
Yeah. If I can imagine it, somebody can do it.
No, it's already happening. Like it's the thing that's currently one of the bigger issues going on right now. It's really easy to do, unfortunately.
Yeah, unfortunately, it is. It is a very real concern. It is something that needs to be addressed, but it's something that gets addressed through appropriate process and appropriate validation, much like the financial team has processes in place to validate transfers and that type of thing. Same kind of concept.
This is an information item. Other questions, comments before I open it for public comment? No, at this point in time, I'll open it for public comment. If you're a member of the public and you're here in person, please raise your hand. If you're appearing remotely, please raise your virtual hand. No hands raised. I'll close public comment on this. And at this point in time, we're through the agenda, and now it's time for committee and staff remarks.
Thank you for a nice crisp meeting.
In closing the meeting, good luck. Thank you. Meeting's adjourned at 3:24.